Okay, great. So we are recording. I'm Jerry Stengel. I'm the founder of Ventioneer, and I'm delighted to have Bruce and Roslie attend this session. We had some technical difficulties, and we're re-recording Current Practices in Community Investing, which is a joint presentation of Ventioneer and Mel Arbit in Community Investing of New Jersey. I'm delighted to have my good friend Bruce Arbit as the moderator of the panel. He is a community investing professional who has spent more than 20 years helping businesses and enterprises who want to access capital for mission-based activities. So Bruce, take it from here.
Okay, thank you, Jerry. So I'm really pleased to have the opportunity to host this webinar. Just a few introductory remarks before I turn it over to my colleague, Roslie Sheehy Cates. Community investing is a very broad topic, and so today on this webinar, we're just going to really focus on one segment of the industry, and really what we're going to be talking about is kind of an overview of the market so people can really understand the industry, and Roslie will be taking care of that piece. Then we'll be moving over to the role of advisors and working with clients that are placing local community investments, and that will be handled by Elizabeth Glenshaw. And finally, our local partner on this from New Jersey Community Capital will be Greg Stankiewicz, who will be talking about the kind of work that's being done in New Jersey, community investing opportunities. So we'll be focusing on those few parts for this call. Just keep in mind that this is an emerging market, so things are changing rapidly. So again, we're just taking this one component of the market. There are a lot of things to understand in terms of regulations and constraints, but there's a lot of momentum, and we're going to highlight a lot of that, but just want you to be educated so you understand the market. And then ultimately, the Community Investing Network of New Jersey is really about taking action. So we're going to help you cut through a lot of that and hopefully provide you with real practical information that will allow you to move forward with your community investing activities. So without any further ado, I'm going to turn this over now to Roslie Sheehy Cates, who's a wonderful colleague and friend. Roslie is a highly regarded community investing professional who recently authored a report, Options and Innovations in Community Investing, a report from the field for the Forum for Sustainable and Responsible Investment, US CIF. So, Roslie.
Thanks so much, Bruce. Just going to do a little check with you guys that you can hear me. Jerry and Bruce, am I on just fine?
Perfect. Loud and clear.
Okay.
Real good.
Thank you. I echo my welcome to all the participants and my gratefulness that everyone is so interested in this field of community investment right now. I feel that my job on the call is to help you understand the big picture of community investment. I'm going to give you a sense of what's going on essentially all over the country so that you understand what's possible and start to frame out who does what a little bit so that the wide variety of callers that we have or participants that we have on this webinar can think about the steps that they can take individually to start getting involved locally with community investment. So here we go with the overview, and I'll just start right in. The first thing is just, what do people mean when they say community investment? And I want to underline here that there's an old definition and an emerging new definition. And community investing has really been around for at least 25 to 30 years. And when it started, it really talked about helping disenfranchised members of the community. What investments can I make that will really help poor people raise their status. And so when people who have been around this business for a long time talk about community investment, really their sights were on poverty and on raising people out of poverty and creating conditions that would help us to end poverty in our communities. The emerging concept of community investment is much more expansive, and it has started to include a lot of green outcomes. How can I improve the environment? It started to include just kind of anything local. What can I do to make my community a great place to live, where all people are included, where everybody has a chance for opportunity? So that's just something I wanted to point out so that you understood that the roots of this business are really in moving people out of poverty, but the emerging idea with community investment really looks at the community as a whole, inclusively. How can all of our members move forward together? And I would say also adding that element of how can I improve the environment? What can I do about global warming? So the environmental triple bottom line, people, planet, and place are all starting to come into view. So that having been said, in this, what is now a huge umbrella of what might be included in community investment, what are people doing? How are these investments getting placed? If I want to take my money, invest it, and when I say invest, I would like to be really clear that I'm talking about getting my money back and likely getting a return on the investment as well. If I want to do that and do well in my community, how can I place that? The kind of neat thing is that USCIF, which is the National Advocacy Organization for all kinds of socially responsible investment, asked us to find out specifically in this category of community investment, what are people doing in 2011? CIF has a very large membership base, and it's one of the things you can do is to join CIF and become part of the conversation there about community investments of all kinds. They have a lot of financial advisors, they have money managers, they have nonprofit organizations. It's just a very large membership organization. And they asked me in 2011 if I would interview a representative cross-section of their membership and really give a state of the state on community investment. So that's the information I'm going to give you now so that you can see what people all over the country are doing when they want to place investments that are called community investments. So here comes the chart. Bear with me. This is an information-packed slide, and I'll just invite you to kind of settle on it for a few moments to really see that it tells you in 2011 all the kinds of products people were using to put money into their community. Now, if you look over on the left-hand side, there's a column called asset class, and that's the way that financial advisors think about your money, essentially. They kind of divide up the money that you have, your wealth, into these categories of investment. So if you speak with the person about your own portfolio, they'll first say, okay, we need to have a certain amount of cash. That's the first category on that left-hand side. Cash is liquid. You got to have access to it if you break your leg or you need to fix your roof or, God forbid, something like Hurricane Sandy happens. You need access to cash to take care of things that you need right now. So the characteristics of cash is it has to be liquid. You have to be able to get at it, and it can't be in a risky thing. I mean, you want to know that it's there, not that it's tied up in some kind of investment that you hope will work out and it's higher risk. So that's cash. After that comes fixed income, and for most of us, this is money parked in mutual funds. It's pretty liquid, but we're really trying to get a little bit of an interest rate on it, not a super high risk, but we want to, usually you put your money here if you want to save for college education, you know, save for retirement. You might have it here, especially if you're younger. So it's a little bit, it'll take a little bit more risk, but it's still pretty liquid. Then you get into public equities, and this is where you start playing around, I mean, essentially with the big boys. Public equities are what the rest of us call stocks. It's when you're in the stock market, and you're essentially buying a stock that's listed on the stock exchange. You're going to leave it in there for a while. See, what you can see happening as you go down this category is people are leaving the money in these investments for longer, and they're taking more risk. So public equities is a really short little thing. It's all the stocks. After that comes private equity, and I want to make sure you understand it. When this is the category that I think a lot of us think we're in when we start talking about community investment. For instance, a lot of us would like to be involved with helping local farms, or we'd like to help a local business. Environment cleaner. When you get involved directly in investment in a company, you're doing a private equity investment, and this is private equity. The other thing included in private equity is anything you do in real estate, such as an affordable housing fund and some other kinds of really special purpose funds that you get involved in. The last categories are hedge funds and commodities. You're getting into higher risk stuff down there on the bottom of this column. And so that's essentially how that side of the column is organized. Now, what can you do in each of these categories? And let me just say that for most people, we're kind of playing around up in the cash and fixed income categories. If you think about your own retirement and you're on the phone and you have just kind of a regular job, that's where a lot of your money is parked. So there's a lot of interest in what we can do with our cash and what we can do with our fixed income investments. Cash, the most typical thing to do, and now I'm in the product column of that chart, is to put your cash on deposit in what's considered a community bank. You might use a local credit union. You might use a bank that only has a branch in your town or has just a couple of branches in your region. These are considered community banks. There's also banks that are registered as community development financial institutions, and that means that not only is it a commercial bank, but it has a double mission, and it is really working to eradicate poverty in the region it serves. So that's what you can do with cash, make a deposit or put a CD in that kind of a bank. When you get into fixed income, there's quite a lot of products. You can buy a note from the Calvert Foundation, and many advisors actually handle these too, but if your advisor doesn't handle it, you can do this online at the Calvert Foundation website. And what the Calvert Foundation does is take this note, and it'll just be handled like any other transaction that you're used to in your portfolio. They take that money, they aggregate it in one fund, and then they go out and relend the money to local organizations that are called community development financial institutions all around the country that are helping either with businesses, people who can't get a regular bank loan, or with affordable housing development. So Calvert Foundation is a great option. It's easy to do. I think the minimum is $1,000, and that money will then get spread around great community development projects all around the country. And I should mention that I think they also have about a third, if I have the number right, of that fund goes to international microfinance. So it's really a nice kind of easy option for somebody that wants to at least get their money knowing that it's doing good. You can also find a loan fund in your own community, and you'll hear later on this recording from New Jersey Community Loan Fund. So you can make your own direct connection to a local loan fund that is working on affordable housing or on getting credit to people that don't qualify for bank loans. And that's a really neat way to have an impact right where you want. For instance, in New Jersey, as you hear later on this call, in the town where I ran a loan fund for years, Missoula, Montana, you can really target your impact directly locally, and then the loan fund will take care of all the work of finding the businesses to lend to, finding the affordable housing projects that make sense, and doing that lending. And you can become very involved in those local loan funds. They're often really energetic, fun places that are doing the kind of boring work of lending, and you can just kind of sit in and be a supporter and really be a part owner in all those businesses that they fund. So those are really neat things to do. Just kind of moving down some other products that are in fixed income, there are mutual funds that have a strong community investment component, and you can find those out by looking, working with your advisor. I guess an example would be Praxis. There's another one called the Domini Mutual Funds, but there's several. They're called socially responsible investment funds. But if you kind of look under the covers a little bit, you can find out whether they're doing a community poverty strategy as part of what they do. The other big category here is to do government bonds. You know, you could buy bonds when you're building a local pool, those kinds of things. Bonds are very safe, and a lot of time bonds, well, all the time bonds are very specific use in a very specific community. So those are kind of a neat way to use a regular conventional product and know that you're investing locally. And then after that, there's international microbusiness or small business finance entities. So those are really all of those options are the most common things we see people doing in community investment. When you get to the next category, which is public equities, these are stocks. There's essentially no strategy for you to buy Wall Street stock and do community investing at the same time. The single example is that the Heron Foundation did bundle a lot of stocks that they did research and found out had a community investment component, but that's only available to institutional investors. So if there's any of you on the call, you can look into the State Street Global Advisor Heron strategy, and your institutional clients can get involved with that. But for the regular Joes of the world, there is not a stock option, a stock possibility if you want to do community investing. Now, private equities is a really cool area, and there are a lot of really neat things to do in community investment. Them are limited to people who are accredited investors. And you'll see on the right-hand side, I've indicated in this chart which investors can do which of these things. And after cash and fixed income, all of the alternatives are for accredited individuals. And these are people who have wealth. I think it's over $1 million in liquid wealth, more or less. That's close enough for the purposes of our call. And there's do things that are way riskier, is basically the bottom line. They can directly invest in a company. These are the people that can go to a bakery and say to the owners, hey, I'd like to help you out. Let me inject $250,000 into your company. They can do that with a farmland fund. They can do it with all of the equity investments that are listed here. And there are a lot of really interesting, for instance, special purpose real estate funds, special purpose timber funds. There's a fund called Lime Timber up east, farmland conservation, all of those. You should be accredited or be an individual to get involved with those. But on the other hand, there are a lot of really interesting things happening with those. And those are a really interesting place to get involved. And then in terms of hedge funds and commodities, there's essentially, a hedge fund and community investment that might be an antonym. I don't think there are any hedge funds that you would consider community investment. And of course, commodities just kind of doesn't apply. So thank you for your patience. That's a huge chart, and I hope you'll keep it on hand. It can help you as you get deeper into this whole area of community investment as you start to kind of uncode what people mean when they say different things in it. This chart really has a lot of information on all the products that people are using currently if they're involved with community investments. And I guess I'll just say, where did it come from? It comes from the practice of people who are involved in placing money now. So it's the real deal. It's kind of the fresh from the field information. So what, right? That's probably what you're saying. Okay, I've got a lot of information about products. What should I notice about this chart? Well, the main thing I would say to everyone on the call, and the assumption is kind of that you're learning about community investment and